Yes, 30 something, about 30, a little over 30.
Oh, all
All
right.
right.
Well, we'll get started here. Welcome, everyone. Welcome to the Foresight Forum. We do a monthly webinar. This is a conversational style, so Kelly and I will just be chatting here today in the studio. We welcome your questions. Please throw them in the chat if you have a chance, and we'll work to address your questions at the end of the webinar. And we will stay on. We understand everybody's time, and if they have to jump off, no worries, but we will stay on to navigate all of the questions and answer them all. And you will have access to the webinar afterwards. So if you didn't have a chance to stay on for the questions, you can jump in at a later time. And we'll follow up with an email summary on that as well. In the studio today, we have Kelly, and I'd love, Kelly, if you could introduce yourself.
Sure. So, hi, everyone. I'm Kelly Slutz. I'm a sustainability manager here at Foresight Management, primarily working on greenhouse gas projects and supplier engagement. I've been here for a little over 2 years. Excited to talk to you.
Yeah, fantastic. Thanks, Kelly. I guess I should introduce myself. I'm Wendy Schlett. I'm managing director here at Foresight. I've been with the organization for a little over 4 years now, supporting all practice areas around environmental, social, and governance type service areas. So strategy and organizational efforts around strategy and certifications, transparency and road mapping, and products. So
Yeah, everything.
and that falls into scope 3. So let's talk about scope 3. But before we do that, let me tell you a little bit about Foresight. If you've been with us before, you can kind of maybe tune out on this, but we're here. For those who are new, Foresight is your partner in energy management and sustainability, sustainability over time. So consider us your outsourced resource. So if you have a project or if you have an activity that you're not able to source. So we can come in and support on a one-time basis, or we can help take on some of those more consistent activities. Maybe some of the data gathering space is some of the main things that we see to be able to help support you over time. We have a holistic approach, and these on the screen are some of our partners. So you can see we're in mainly mid-market manufacturing.
Right.
All right.
So, Wendy, why are people talking about sustainability data these days?
Oh man, pressures are coming from all over the place. We see pressures in many different buckets, but two of them that I'd really like to highlight. You can see policies and mandates, but I'd love to highlight the investors and the consumers in the supply chain. So investors are definitely generating pressure. They're looking at the risk associated with their investments around all things sustainability. And so those pressures are coming in the forms of, what type of metrics and how transparent you are as an organization in sharing those metrics around sustainability. And another pressure that we're seeing is in the consumer and supply chain side. So consumers are getting more savvy. They're getting more familiar with labels. They're looking for labels on the products that they're purchasing. And then, the supply chain as well is being asked to,
Lots of questions.
lots of questions in the survey. Exactly.
Yeah.
Absolutely. And they're getting inundated with the surveys. And what comes with those surveys is also a need for data, which is why we're here today talking about data. Some of the pressures that we're seeing around, the regulatory updates. So this was that first bucket that we kind of passed over pretty quickly. But some of those regulatory updates that we're seeing are coming both from the United States. So we're seeing pressures at the state level. California has mandated scope 1, 2, and 3 emissions be shared through a reporting platform, which is yet to be determined. That rulemaking has not been finalized. The regulation is finalized, but how companies are to share that information has not yet been put out. But that is supposed to come out in July of 2025 is my understanding. So the reporting will be through the regulatory body within California. So the CARB California Air and Resources Board. So if you're familiar with that regulation through environmental regulations in California, if you're doing business
Mhm.
there, it'll be generated through that platform. The interesting thing about this is California includes Scope 3,
Mhm.
which is something that companies have just started getting into this space. So, and not only are they incorporating Scope 3, but they're also including that the data needs to be third party assured.
That is new.
Yes, so that is something that in the regulatory space is new to the United States. The next reporting aspect in the United States,
There we go.
in the United States is, yes, SEC mandates. So this is a regulation coming more at the federal level, at the investor space. So the SEC governs financial disclosures. And there was a rulemaking, although it's still in draft. It was approved, but has been pushed a bit. And so this is a space, again, that includes Scope 3 emissions. So it would address Scope 1, Scope 2, and Scope 3. If these items are material to your organization. So that is a key factor, is determining if this is material. So getting into the concept of materiality.
We'll touch on more.
Yes,
Yeah.
we'll touch on more as we go through, but that's a critical piece. But if it is material and you are publicly traded, this is something to pay attention to for once it goes in final form.
And if you are doing a lot of business in California, you're reporting more to California than to the SEC. So really, is the California reporting your threshold?
That's a
I
good
guess,
point.
yeah.
Yeah, absolutely. So, reporting into California, if the threshold is $1 billion, I believe. If you're doing business within the state of California and you have $1 million in revenue, you'll be subject to this regulation. So yes, even if you're not publicly traded, if you're a business entity, doesn't matter necessarily where you're located. It's just if you're doing business in the state of California, this will impact you. All right. So moving out of the country of the United States, more regulations are coming. So CSRD is coming out of Europe. This is an effort where if you're publicly traded, or if you have 250 employees, 20 million in assets, or 40 million in revenue, you could be subject to this regulation. So you do not have to have facilities necessarily located in the EU, but again, doing business through the EU, this regulation can impact you. There's a phase in of when different entities are subject to this reporting requirement. The first wave is really starting in 2025. And so customers are being asked to gather data, and the data around this is very significant. So I believe there's over 1,100 different metrics that are required for CSRD. So not a small undertaking. Again, it gets into what's material to your organization, so we really have to pay attention to that. You may not have to report all 1,100, but you will need to understand which of the metrics you're going to need support. And Scope 1, Scope 2, and Scope 3 is part of this regulation as well. So more regulations on the way.
Right, that's the global trend.
Absolutely. And one more, CBAM. So another one that includes a lot of data and a lot of Scope 3 data.
Yeah.
So CBAM, which is the Carbon Border Adjustment Mechanism. So this is essentially some are calling it a carbon tariff, some are calling it a carbon tax, but it's essentially trying to place and understand how much carbon is required to create or generate a product that is being sold into, again, the EU. And they're starting with certain materials. So they're starting with some pretty popular materials: steel, aluminum, cement, some of the bigger energy consumers. But if you're doing and selling through, this can impact you within the supply chain. So if the OEM is the one being asked, because they're the ones doing business in the EU, but you're selling to your customer. Your customer may be asking you for this data and they're going to ask it for in a specific way to be able to
Right.
support this particular regulation. So
Right.
so much is on the horizon, lots of pressures in this space.
It all requires a lot of data, to your point. Yes.
Lots and lots of data. Absolutely. And so many of these start, all of these different regulations seem to start with scope 1, scope 2, and scope 3 inventories. So what does that mean and what are the distinctions?
Sure. So within greenhouse gas accounting, we categorize greenhouse gas emissions of a company into 3 scopes. So your scope 1 emissions are your direct emissions that are burned on site at your facilities or in vehicles or other equipment that you own or have operational control over, that you own and operate. So that is usually your company facilities and your fleet vehicles. Your scope 2 emissions are your indirect emissions from the use of electricity. Usually purchased electricity is in this category. So it's energy that you're using on site at your facilities or in your vehicles, possibly. But the energy is not generated at your site. It's not burned on site at your facilities. It's generated at a utility provider and then transported to your facilities. So that's where usually it's electricity is what we see in that category.
Mm-hmm.
And then your scope 3 emissions are everything else that goes into your business, your supply chain, value chain, that's not included in your scope 1 and 2 emissions. So you don't own or necessarily have any sort of control over it, which is what makes it a little bit challenging. And because it's so broad, it gets categorized into 15 categories. So that's what's on the screen now and represented in the boxes. There are 8 upstream scope 3 categories. So that's what's happening to materials and different transportation before those items ever get to your company. And then there's 7 downstream categories. So that's once it leaves your facility and onto its end of life.
So there's a lot of data being collected in this
Yeah.
in this
And it's
process.
even related to your employees. So it's looking at how they're getting to work and how they're traveling when they're doing work for your business. All the transportation, what happens to your waste once it leaves your facilities. Yeah, everything.
So when you're talking upstream activities, this is everything all the way back to
Raw material extraction,
okay.
or if your products have materials that are being grown somewhere. Yep, all the way back.
Oh, fascinating.
Mhm.
So knowing your supply chain is part of this process.
Correct.
Oh, let's talk
Very
about,
important.
let's
Yeah.
dive into that at some point in time through
Sure.
this webinar.
And then it's important to remember as well that your scope 3 emissions and your scope 1, 2, and 3 emissions are the scope 3 emissions of your customers and your consumers. So that's where these emissions are all overlapping within the supply chain. So it creates some opportunity where you can work together with your customers and consumers. But this is why you're getting lots of requests and people asking you for information, because it's also their data.
It's so unique how they organize all of this into, I like to talk about it as buckets almost,
Right.
To try and prevent a lot of that greenwashing so that
Right.
you're not double counting.
Mhm.
You're really aligning,
Right.
one scope with one activity.
That is the purpose, to not avoid double counting, make sure you're accounting for everything as accurately as possible,
Mhm.
and then being transparent about how you calculated it, and what all goes into that.
Yeah, absolutely. Such an interesting approach to being able to collect all of this data so that we're,
Mhm.
not overlapping, and really paying attention to the accuracy of where the data is coming from and how it's being
Yeah.
presented. So what are some of the challenges, with scope 3 data? I mean, upstream, downstream, that there's a lot of data collected.
Yeah, lots of
big
data,
value
lots of
chains.
challenges, yeah. And to your point about setting up these buckets correctly, so when we're talking about, I mentioned operational control, and there's this whole concept of organizational boundaries. So we're trying to understand what is your responsibility, what you have control over, and then what falls out of your immediate control, what you would consider outside of your boundary.
Mhm.
And that goes into your scope 3 emissions. And so you're not double counting what is in your scope 1 and 2 boundary and what's outside of that boundary. It sounds simpler than it is, honestly, which isn't always the case, but there's a few different ways you can set up your organizational boundary. So on this slide, there's three approaches set up by the Greenhouse Gas Protocol. Either equity share, so that has more to do with your financial ownership of different operations, and then your operational control. So again, that's more what you own, what you're using to make your products, and the vehicles even that you use that are used to make your products, and then that financial control as well. So if you do own it, you could set up your boundary just to be what you own and
Mhm.
not have any ownership over leased buildings or something like that.
What is some of the reasons companies go, choose different organizational boundary approaches?
Well, it depends on the type of business. So, right, it depends kind of how the business is set up, what makes the most sense as to how they own different assets. So if you, mostly for manufacturing companies, which is mostly what we're working on most of the time, you'll see operational control just because those are the facilities and vehicles that you're using, and you're paying employees there, you're paying the utilities there. So really you have a lot of control over those facilities. But if you were a company that was more of a private or oh, I'm blanking on the term, but a private equity firm, so you
owned by.
own companies, but you're not necessarily in charge of making products,
Mhm.
you would want to use a different approach because you want to understand better where your ownership, what the emissions from your different types of ownership are, if that makes sense.
So it's interesting, and I think it's what you're describing is getting at what this slide is sharing is that at the organizational level, you need to know what your data is so that it could almost be parsed in different ways depending on parental, who the parent company is, how
Right.
that parent company organizes their information and has to capture their greenhouse gas emissions.
Right.
So I know on this slide, it talks a little bit
Yeah.
about each of these different colors and bubbles show different percentages based on the different approach. But in order to get to that, the equity share approach or the financial approach, you really need to know how much based on your
Right.
operational control, you need to know 100% of what that data is within that facility to be
Yeah.
able to parse it up in different ways. Wow,
Right. You actually
fascinating.
know what to collect. Yeah.
Yeah, absolutely. Oh,
Right.
challenges.
Yeah. And so beyond just setting the organizational boundary that you're going to collect data from, once you actually get to data collection, there's lots of different challenges that can come up in that case. So because there's so many categories, it can be overwhelming. We understand that. And it is a challenge to collect data on so many different types of activities. And a lot of it, again, you don't have much control over or may not even know someone that you could ask to help you gather data. Usually we start out with a lot of estimates and assumptions just so that you have a number to start with, which is still a valid way to start out and understand your total scope 3 emissions, and help you set targets and then be able to collect better data in the future. But start getting the primary data is always a challenge.
Yeah, absolutely. And we're talking here, this is scope 1, scope 2, and scope 3. When we think about data, there's
Yeah.
that's and we talked about CSRD being 1,100 different metric points. And you're talking, I mean, that slide just showed so many different data points just for scope 1, 2, and 3 pieces. So there's obviously a tunnel vision is what we're kind of seeing. There's such a focus on climate change and such a focus on, gathering scope 1, 2, and 3 data. And it's important, not saying that it's not, but just starting to think about that broadly.
Right.
There's a lot of other data that's needed beyond the greenhouse gas emissions when you're talking about some of the regulations, especially in the European space, to support the different reporting requirements or customer surveys or all of those different mechanisms people are asking for data.
Right. This is usually just one section of a survey on your greenhouse gas emissions, but lots of different metrics to keep track of.
And so when we talk about collecting data from the supply chain, I have to say, I empathize with manufacturers in trying to gather this data. What we've got on the screen is showing, tiers of suppliers all the way back to raw material extraction. So if we're talking that upstream data, that's everything on the left-hand side of this screen. If you happen to be, a final assembler or, whether that's a final product or a component or a subcomponent, like there's a supply chain that fills that. And
Mhm.
so, looking at the data sets and where the data can come from, a lot of times you're trying to get it within your organization. So you're trying to get it at the
Mhm.
final, the finished product location. But now for scope 3, we're asking to go back a tier,
Mhm.
or 2 or 5
Further back.
or 15, depending on how deep your supply chain
Right.
is, can be challenging,
Right.
within the space of trying to gather all of the data. So, and the interesting part about that means that the risk increases.
Right.
So, the
Right.
possibility of getting incorrect data, increases, or no data
Right.
at all increases
With
the
every
further
tier.
back
Mhm.
you go in the supply chain. So, the OEMs, no matter where you are in the supply chain, you're trying to pull that data,
Mhm.
you're trying to encourage them to come uphill, pushing a
With
rock
you, yeah.
uphill. Yeah, with you, essentially. Exactly. So, just looking at supply chain data is, and that engagement space
Mhm.
is definitely necessary. Um, I think the further and deeper you have in your supply chain, the
Yeah.
more educational outreach is almost necessary,
Mhm.
as much as it is the need to actually ask for the data and collect it.
Right. And we've seen just even if you're a tier 1 supplier to an OEM, you're becoming more and more responsible for your suppliers. So an OEM might ask you questions about your own tier 1 or tier 2 suppliers. And it's really hard to get that information, even who they are, just because of proprietary reasons. People often don't want to tell you who their suppliers are. So yeah, it gets really challenging, but you're right. There's lots of different risks to us consider too, not just carbon risks.
Yeah. And, when you think about this, the OEMs, the large organizations have been really working to try and identify the data
Mhm.
that's needed. And they've been working on this probably somewhere around 5+ years
Mhm.
at least, if not more. And so knowing that it's taken them that long, and and the amount of resources that they may have available, for some of the larger organizations, getting that to scale, back upstream and through the supply chain is just, is going to take that time.
Yeah.
And the time is running out to try and meet these regulation deadlines as well. So there's definitely some tension in that,
Mhm.
in
Right.
that
Yeah,
space to
tension.
try and overcome.
Right. 'Cause yeah, they're further ahead too, so they're asking more sophisticated questions and
Right.
yeah, I don't know if they're fully preparing people to answer those questions. Yeah, but we're trying to.
There we go. Yes, that's us. All right, unpacking if that didn't feel overwhelming,
Yeah.
let's go back to scope 3. Let's talk about, just that one data metric, scope 3 data. How do we begin to unpack that?
Sure. So yes, it is a little overwhelming, but there's also guidance out there. So the World Resources Institute Greenhouse Gas Protocol has a specific document around Scope 3 emissions and provides framework and guidance on how to categorize the different activities within your business in those categories and all the different types of data that you can use, because there are many different types. And again, they help just outline those categories that we talked about, all 15 of them.
So if we're looking at all 15 of these,
Yeah.
I mean, how do you begin to, this seems overwhelming in and of
Yeah.
itself. So we have to help companies start the process, and
Right.
begin to identify like certain ones, so
Mhm.
that they can begin, instead of just starting with all 15.
Right. Because you want to understand, and maybe I'm jumping ahead to more of the ways to help you identify these, but just a good understanding of what falls into each category and just starting with the data that you have, which most of the time is financial data, how much you've spent on different materials, is the best place to start. And like I
Okay.
mentioned, some estimates will probably fall into that, just so that you understand
Mhm.
your full what your emissions could be, and then you can dial down further into different sources of data directly from real sources.
So talk to me about financial data. So
Yeah.
you're for this process of gathering all those 15 categories.
Mhm.
But what do you mean when you say financial data? What does that process look like?
So usually we'll start with a company's expense report or trial balance report or general ledger report, somewhere where all of the expenses that a company has made in a year is located. And then we can look at those different entries. Sometimes we don't, like for me, I'm not, I did study accounting for a while, but I'm not an accountant, so I do have to ask questions. But we can start to separate those into the different categories right away, just from looking at an expense report.
So we can work with the accounting department, run everything through a screening. So there's different factors that we can convert the financial data into
Correct.
scope 3 emissions.
Yep,
Interesting.
and there's some adjustments you do have to make for money that's data that's based on money, just because of inflation rates from year to year. If we're looking at an emission factor data set that was released in 2018, things have changed since then in relation to how much things cost. So we do an inflation adjustment, and then depending on where goods are purchased, there's adjustments between countries as well.
So we don't necessarily have to reach out to the supply chain at this point.
No.
Interesting.
But it's a starting point. It's not the only way in this case that you could reduce your emissions then is to spend less, which maybe isn't what you want to do.
So then, once you go through the screening process, what is the outcome look like?
Right. So let's see. So you will get just an output of what your top categories are. And so speaking to materiality, that would help you identify which of the top, usually we're looking at 3 or 4, not usually even as many as 5 categories end up being your most material categories that you would want to try to reach out to suppliers or other individuals within your value chain to collect more specific data, rather than just how much you spent on goods, but actual weight, volume, that type of data. Okay. Is what we're looking for.
So once you get that, and that's looking at just maybe that purchased goods and services category,
right?
Focusing on one category, so not all 15, and then we reach out, like hotspots almost, like we identify within the supply chain hotspots.
So we're trying to identify those hotspots within the categories too. So in this case, and most often for manufacturing companies, we see that purchased goods and services or category 1 is the most material category, just because that's what all your raw materials end up in that category. It's what you're using to make your products. And then we often see transportation as one of the higher categories. At least, there's 2 categories for transportation. So those are usually in your highest material categories too, just because you're transporting materials as well into and out of your facilities. And so in that case, you would understand that those are your highest categories after doing a screening based on spend, or there might be other categories that show up in that assessment, or an initial assessment. And then you would want to try to understand distances that your trucks are traveling, or even if it's not, this isn't your fleet, so you're trying to understand distances that other trucks are traveling to transport your goods, what people are using to produce your products. So that's where a lot of the surveys are coming in. They're trying to understand what energy you're actually using in your facilities to make the product, so that they can include that in their scope 3 totals at the higher tier. Yeah.
So we saw just this, just trying to unpack this even more. There's so much here. So, in thinking about this, you mentioned talking about the screening first and using financial data. And now we're getting into a space of trying to better understand one particular category of that scope 3. And so it sounds like we're now getting into the data space of what is, we talked a little bit earlier too about data consistency and data accuracy. So it sounds like there's a gradation around data, and this is a space. Thank you. Yes. And this is a space where it sounds like we're trying to get better and better data.
Right.
Okay.
So constant improvement is the goal, because it is, like we talked about, it's difficult to get at this data. So you're right, there's a gradient, and this graphic from the greenhouse gas protocol is helpful in understanding where we're starting and where you want to go. So you'll see that spend-based method, or that's the financial data that I was talking about.
Okay, that's
kind of
down here on the left corner.
exactly at the bottom. So
Yeah,
that's the best place to start so that you understand where you're at. But then you can move up and include more supplier-specific data and what they're calling the hybrid method. And eventually you could include all supplier-specific data, or that means just data that you've collected directly from the source of that material or product or service.
okay.
So
And so sometimes I hear, at least around our office anyways, there's a difference, you talked about financial data versus primary or physical data. There's like a language opportunity
Yes.
here to kind of talk through. So primary data or physical data is data that's actually coming from the supplier. The supplier is giving it to us.
So that's primary data.
Primary data.
Right.
Okay.
And then physical data might not be primary data, but it's data that's based on mass or volume or distance.
So
So it's a physical unit of measurement.
So it could be estimated or an assumption in that space.
It could be. Yeah.
Okay.
Yeah.
So we really, when we, not only do we need to understand where the data is coming from,
Right.
which is primary data or financial data, we also need to understand if that data has an estimation
Right.
that's associated with it as well, which
Right.
makes it physical data. Am I saying that right? No.
No, I think, right. If it does have an estimate or an assumption in it, then it's technically secondary data.
Perfect.
But if it's
Okay.
directly from a supplier, then it's primary data, or from a source
Okay.
that has actual data tied to the energy usage used to do the activity.
Okay.
But that physical data is just if it's a physical unit of measurement
Physical
instead
unit.
of a spend-based or financial data set based on money.
Thanks for clarifying that.
Yeah, good question.
It's definitely one of those things that I know, clarification around, terms is very important. So, and we're trying to work through that around all of this different types of data. And it's awesome to see that, WRI, when they laid this out, they had a really deep understanding of the challenges that were in front of them around collecting all this data and coming up with ways to estimate based on what is the most available at an organization, which is financial data. You have your bills of services and invoices that you have to pay, and being able to make those conversions initially and then slowly over time increasing that data accuracy and primary data coming from the supplier. I think I used that correctly.
You did. Yeah, you got it.
Awesome. So, moving into a space around influence and control. Now, I know you had mentioned this earlier a little bit.
Yes.
And this is a big difference in the space of data. It's definitely more challenging to get data when you don't have control over the operations or the organization that you're trying to get data from. So this is a space of influence. Anything that's outside of your control is defined as being able to influence or encourage the opportunity to either get the data or encourage education to be able to, support goals or opportunities that you're trying to work with your supply chain in. And some of the challenges, an opportunity, I guess it's a challenge and an opportunity in both the spaces. The challenge is how do you engage your supply chain? Because the data is coming from the supply chain and you don't have control over that. This is just a space of influence. So we're seeing organizations spending time in what we call supplier engagement or educational spaces, where they're taking the time to train their supply chain on what the specific asks that they're making. So some suppliers or some OEMs we see just sending out a survey, and that survey has instructions, but it for an organization, a supplier that does not necessarily have the resources, or if that survey is coming into procurement, or the sales team on the supplier side, where should that survey land and who has the best information within the organization to fill that survey out? All of those can be challenging issues. And so the more education that the OEM can offer in that space, we're definitely seeing like that's an opportunity to leverage. And then also support, it encourages collaboration.
Yeah.
And so the more the supplier can raise their hand and say, hey, we want to collaborate, we want to be in this space, the more opportunity it is to engage in what it is the OEM is really looking for, and being able to support. And then there's always the opportunity for the OEM either to provide some sort of financial incentive to engage in the goal setting, and especially when we're talking about those hotspots around scope 3, like being able to focus in on certain industry sectors that are really energy intense. How do we as a complete supply chain support that to make some of those changes, to be able to show lower carbon footprint products over time.
Yeah, and even within each category too, you can identify hotspots as
Absolutely.
well. So once you kind of do that initial assessment, it's recommended to dive deeper into your most material categories through doing a scope 3 inventory. And that's where you can identify those bigger hotspots within each category.
Absolutely.
There's hotspots within hotspots. Yeah.
And we've got data within data.
Yeah.
So then, and then looking into control. So then we're talking on the other side. So within your organization, you've got control over the, certain aspects of the data. And so having that data available helps you make decisions around that data, because you can internally define what are the hotspots, what are the big ticket items that, what are the baselines saying in comparison to year over year data points and trajectories, and being able to really determine what are those, big areas that we can make impact. So using that data to be able to define those decisions going forward is really important. And you have that ability because you have control over that data, because it's all within your organization.
Right. And through doing a scope 3 screening, you can start to identify where you have influence and control once you're starting to look at your financial statements and understanding what you're spending money on, what activities you are more within your control, and start to look at the categories and categorize them as where you can influence someone, or start a program with a supplier, work with your transportation network, your third-party logistics providers, or offer incentive programs to employees. And then where you have more control, where usually, at least within your operation, sometimes you have some control over your waste vendors. You could change that to increase the amount of waste that's getting recycled, add more waste vendors. And business travel, you often have a lot of control over that too, or it can influence your employees to travel differently to conferences or different training opportunities. So screening can give you a lot of good data.
And virtual. I mean, think,
Right.
this type of platform has helped companies make decisions around employee travel as well.
Right.
And just thinking about some of those examples you gave, Kelly, around like waste generation. So I know we talk about like scrap rates. It's not necessarily just the hazardous waste that a facility or regulated waste that a facility may operate. It can be the scrap rates from a metal or a plastic shaving that they're generating. How do we account for the emissions that are generated in that scrap rate and look to reduce them? So that's all within the control.
Right.
And it's interesting. It's a scope 3 data point as well.
Right. Because as the company, you're not doing the waste treatment on it, but you do have some control over who you're paying to do that waste treatment.
Right. And then who's generating it, how you're generating it as well.
Yep.
Awesome. So many opportunities there, so many challenges.
Yes. So we've talked about kind of a 3-step approach today. So chunking how you're approaching your scope 3 emissions, starting with data that's more readily available, and then trying to get access to data that's a little bit more challenging to get, and collaborating with others. But yes, there's still these common challenges of knowing where to get the data, pulling the data, and then knowing how to use it.
And so it sounds like going back to the screening, the inventory, working in that gradational pattern of opportunity around collection of data to be able to move forward.
At the end. Yeah.
Absolutely. So lots of data collection opportunities, lots of strategies. So strategize, some of the key takeaways, strategize around the data. I think, data can come from all different ways to get it most accurate, most consistent. You're looking to define what is the data points that you need, what are the hot spots that are critical. There's so much data that can be collected. What is the pertinent data that makes it, that can help your organization make a difference, whether that's within your control or within your influence in that space.
Because you want to pick the data points where the actions you make, you can quantify.
Absolutely.
Like I mentioned, if you're just looking at spend-based data or financial data, you can only decrease that by spending less. So
yeah. Absolutely. And start with your top 3 categories as what it sounded like you were saying, focus on the items that have the biggest impact. So maybe it's one category, maybe it's 3 categories. But one category, especially if you're talking about purchase goods and services, which we see as pretty typical in manufacturing as the top one, that's a pretty big one to bite off. Those materials come from lots of different suppliers. A lot of times that makes up like 80% of total spend is within purchase goods and services and a vendor list. So it's a great place to start. And it will capture a majority, probably account for a majority of the emissions being generated. And by starting with scope 3, over time, you could then expand out to, once you establish that interaction and engagement with the supply chain, and some of those the other data points over time will potentially be easier to collect once the routine is developed. Wow, so much involved in scope 3 data, so much involved in data as it is. And so lastly, I think just a takeaway around, the education piece. I feel like that is a critical component of trying to gather data, both internally in your organization, getting into the why, helping people understand how their impact can support that data collection process, and even outside the organization into the supply chain, helping understand why you're collecting the data, the needs associated with it. It's not just an exercise to, make you do extra work in the supply chain. There's actually reasons and transparency that at the OEM level, and regulation, especially regulation, that relate to these data points.
And the better you explain the reasons and what you're actually asking for, the better the quality of the data will be too.
Absolutely. And that's what we're getting at.
Yes.
Trying to strive for quality data.
Right.
Well, thank you. I think we hit to questions and answers. If anyone has any questions, I'd be happy to answer them. And I'm just realizing I don't have my phone to be able to receive any of the questions.
If you don't have all of your data, where do you start getting model data sets? How do you get them?
Well, there's lots of different average data sets out there. So there's different databases for emission factors, life cycle assessment databases have some data that you can use, and just published research. There's lots of different academic sources that people have studied a lot of different things. So there might be something out there that could help you estimate something as a place to start.
Life cycle assessments are a good place to try and pull in model data and data sets. Another, you mentioned, like industry research. Some industry associations have published industry averages for different materials. So that's another great spot. But life cycle assessments, I would say, are the big place to help fill gaps with estimated data.
Right, but it's still often estimated or average data. It may not be.
Correct.
You want to think about it as primary data.
Right. So we like to think about using life cycle assessments to fill the gaps when you can't get the primary data. Absolutely.
When we send out questionnaires, we often don't get a great response. Do you have a better strategy for hearing back from our suppliers? I'm paraphrasing.
Okay. Well, we've talked a little bit about the kind of including more education and building kind of your engagement strategy. So instead of just sending a single survey, sending them maybe a video that helps explain what you're asking and why it's important. I think
Mhm.
explaining why it's important helps
Mhm.
get better engagement. And it can be really short too. It doesn't have to be a long video since not many
Mhm.
people want to watch long videos. But yeah, what else do you think?
I would say, just to expand on the video concept, I think that is such a great format, because you have the opportunity nowadays with technology to be able to capture even the CEOs,
Yeah.
like support and awareness, and that drives a lot of engagement from the supply chain. They're much more interested knowing that the CEO of their customers really on board and really needs this, is driving this support. And then, getting into the why, and then really getting into specifically, like even a short video on how to fill out the questionnaire.
Yeah.
Where's the data coming from? Where within the organization, more like divisions or, like skill sets could help inform the data that needs to go into that particular spreadsheet or whatever form that you're
Yeah.
using to collect the data. That's a real key approach to be able to engage the supply chain. Another recent opportunity that we're seeing is, companies using scorecards within the supply chain.
Mhm.
A scorecards being built again within utilizing strategy
Mm.
around the data collection, so knowing exactly what data they need to collect from the supply chain,
Mhm.
and then working to create that scorecard and utilizing the scorecard to help inform the supply chain of what are the hotspots and the missing data that they might not have. So if a survey goes out and they're scoring low in, then the OEM can track that and then create training programs or engagement and collaborative
Yeah.
meetings around some key specific topics that the supply chain is struggling with. So
Right.
if you're an OEM asking a supplier to provide you with say scope 1 and 2 data, but that supplier has no knowledge of what scope 1 and 2 data is, then getting that scorecard back and it's blank, or
Mhm.
not having the supplier even respond. And some of that
Yeah.
lack of response becomes visible because the survey is not going necessarily to the correct person. A lot of times we're seeing it come through procurement and it goes
Mhm.
straight to a supplier salesperson. And then, so
Mhm.
that's one open of the email. And then it goes on to um, say engineering, and they may open it. And if they're not familiar with it, a lot of times we see the questionnaire drop.
Mhm.
And so really identifying key personnel up front as to who to collaborate and where this survey should go is another
Yeah.
good strategy around trying to gain more access to the supply chain.
Sure. I have heard too that maybe just to add, to be honest about how you would use the score. I know the question was about if people don't respond, but I have heard from some companies that they've had companies respond just so that they get like a better score, but they're not responding with accurate data. So you want to be careful, just like if you're explaining
Absolutely.
that if the scorecard is going to be used to really whether you decide you're going to continue using them or not, then
Yeah.
people may not give you the right data. They'll just fill it in. Maybe.
No, that's absolutely interesting. We had a bit of a workshop yesterday with a group of manufacturers, and there was a manufacturer in there talking about that, how they're now actually sending auditors from their auditing team out to suppliers to be able not to penalize them around the data that they're
Right.
sharing, but to help them understand how important the data is and to make sure that the data that they're receiving is actually quality, so that they're not just submitting poor data to be able to satisfy the customer with just anything.
Right.
Yeah.
So the SEC disclosure ruling and the state legislation like California SB bills are still in process. Do you expect a change in administration to impact these being finalized? Or how
That's a
do
good
you
question.
expect this to impact?
In the United States, I do not so I'd like to stay out of the political arena. But it's at the same token, because California's law was passed at the state level, we foresee that
Mhm.
that's going to continue. And the SEC level has been delayed. At the federal level,
Yeah.
that one's a good guess. But at the state level, we're seeing more and more regulations come out at the state level, which is actually making things challenging.
Mhm.
And not just for scope 1, 2, and
Yeah.
3 emissions. We're seeing that, in other areas, other regulated, types of chemicals of a concern, as an example,
Yeah.
such as PFAS. So
Mhm.
Maine came out with the PFAS regulation. Minnesota, I think, was the other state that came out with regulation. So I think you may see more state
Yeah.
supported regulation. And on the other side of the opportunity is that the economy is now global, and whether the United States passes a federal regulation relating to scope 1, 2, or 3 data, we're seeing it at the global space. So we see a lot of companies being impacted by the EU regulations, such as CBAM or CSRD. And whether you might not be directly impacted, your customer might be directly impacted. And so then you will be asked for those surveys and that data through that opportunity.
Yeah.
So it's not going away from my perspective. And we've, definitely in the last 5 years, we've seen a lot more global regulation. So that's almost driving more activity than what's happening in the United States.
Mhm.
All right. Well, that sounds like that's all of our questions. Thank you so much for joining us today. And we look forward to seeing you in December. And a big thanks and shout out to Carolyn for supporting us on the questions. Thanks, everybody, and have a great day.
Thank you.